throughout history, 5 quarters, given a crisis, okay, not a technical recession, so to speak, it's 5 quarters. So you have holding power for 6 quarters, you are good to go. So Adrian says at least 5 quarters. Great, you guys have some level of awareness here in terms of holding power. And I just want you to know that, given the seller stamp duty in place, minimum holding period is also 3 years, and per year is 4 quarters, right? So that would eventually amount to 12 quarters if you want to invest. All right, so that's being even doubly prudent in this manner. But of course, 5 to 6 quarters is safe enough. So moving on into understanding the universal law of balance, and this is something important, just like the law of gravity, right? I want you to know that the law of balance shows a natural equilibrium exists in the universe. Everything is interconnected. There is always a corresponding opposite or balance force. So every boom contains its correction. So in real estate terms, price surges are always followed by phases of slowdown or correction. And I want to emphasize that this is not a collapse. It's in calibration. So in 2010 to 2013, price surged by 37%. Market corrected in 2014 to 2017, 3 years later, and that's a deficit 12% due to cooling measures. And then post-COVID rebound from 2020 to 2023 at 28%, and then now showing signs of normalization in volume and also bidding activities by developers as well. So the smart play isn't to fear the correction, but to understand it. Balanced market offers better entry point and also safer long-term gains, and this is something important to take note. I want to share with you that if you were to put it into the table, how would that look like? So from the period of 08 to 2013, post-global financial crisis and recovery and boom, index changes was upside of 37%. From 2014 to 2017, cooling measures phase was deficit 12%. And 2018 to 2019, stabilization period, which is a plus 4%. And 2020 to 2023, post-COVID, low interest, high demand, we went up 28%. And in 2024, early signs of moderation, a flat plus 2%. So the question I want you to think about is, what is the opportunity cost if you thought that prices was really high in 2014 after 8 sets of cooling measures, and then the market went up by 37 percentage points based on property price indexes? What is your opportunity cost? Because this is exactly what's really happening right now before some sort of stabilization happens in the market. Okay, so to put things into context, if 2014 you think the market is high, first thing, there's a deficit of 12%, a downtrend, followed by a plus 4%, and then a post-COVID upside of 28%, and early sign of moderation of 2%. Your opportunity cost by sitting on the sideline thinking that 2014 prices is high and prices is going to drop even further continuously, well, your opportunity cost is at least 22%. Okay, so I want you to know that we need to learn from the history, but then apply it to do better as an investment strategy comes 2025 onwards. So we have been here before, right? And right now is how to win. And here's your playbook to win, all right? And I want you to stay extra focused here, okay? So before I dive into chapter 2, how many of you agree with me that market is going through a calibration right now? We must be able to make sense of this calibration. It's not a collapse. Because if it's a collapse, then of course we have to sit out and then see what happens. We have strong policies in place. In fact, we are much more prudent right now with what the government has set up, even as task force as well, right? Okay, so this is not the first uncertainty that we have faced in year 2020, okay, since 2020. So how to win? Do what the wealthy do, in short, just be a copycat, right? So in April 21st, 2025, we saw that Singapore Good Class Bungalow market sees interest picking up and amidst global uncertainty. So what it means for all of us, wealth always moves first. In fact, this is always a leading indicator for the market. In 2024, we see Good Class Bungalow sales doubled to 22 deals, which is equivalent to 1 billion in size. Billionaire sees crisis as a buying window, not a risk. Scarcity fuels legacy play, and many of these people who are buying Good Class Bungalow in today's context are all building legacies, right? Okay, so only about 2,800 GCBs in Singapore, and there are about 2,000 plus family offices competing with each other. In short, 43% growth year on year. The government also focused a lot on high-density land parcel, making landed properties even much more limited. So scarcity is at play. And what does it mean for the market? There's a split market that sharpens. Prime good class bungalow went up tremendously, while non-prime good class bungalows stagnate. The wealthy buyers are ruthless on its value and its prime location. In fact, for context, prime GCB in Tanglin Hills transacted for $6,200 per square foot this year. And previously, just in 2023, it was only done at $4,500 per square foot at the Nasim. This is close to 40% gain in value in just 2 years. Can you see how the rich gets richer? Okay, so if you wait for certainty, you miss the play. In short, you have to recognize that crisis equal opportunity for those with holding power. So is it a condo boom or is it a condo trap? So this is the Business Times article in March stating that the number of Singapore residents living in condo has doubled over the last 15 years, counting from year 09. And condos and other apartments here, you can see from a total percentage since 09 is 9.6, but right now it's 16.9. But in HDB segment is from 82 to 76. In fact, there's lesser. And also landed properties is well lesser too. So the more affluent class in this context is actually people moving towards condos and other private apartments. There's an upgraded search. Does that equals risk or threat? So 30% of new buyers under 35 are fueled by HDB resale profits, and these are likely buyers who bought BTO from the government. The challenge here is that we may see a future bottleneck where the 10 years MOP flat starts to kick in, and that will slow down upgraders' pipeline. So this is what we'll be seeing 10 years down the road. The price out generation is buying risky. Why? Because younger buyers are flocking to OCR condos, and that's what drives prices up by 113% since 2009. There's an oversupply risk ahead as well. Poorly located project could stagnate if you are buying the wrong one. So UT zones are your hidden gems. So what are UT zones? Basically urban transformation zones, if you've been following me for some time, right? So focus on government long-term plan, not just short-term play. Initiatives such as relocation of Paya Lebar Air Base are hotspot that you could spot as well. And also avoid aging condos, because prime and freehold status don't always grow, as we've learned over the last 5 years on how property attributes and behaviors works. Big transformation, that's where profits will compound. The wrong location will trap you even if there's opportunity. So will you ride the boom or fall in the trap? So UT zones are the hidden edge for your boom. What is a hidden gem example? And in here, I want to share with you Lentor Gardens, which is recently bidded. So Kingsford Group submit a top bid of $920 per square foot per plot ratio for Lentor Gardens sites. There were only two bidders at Kingsford and Hong Leong with CSC Group. Their bid is not far off, just $15 PSF PPR difference. So one catalyst likely driving the interest in the government land sale site in Lentor Garden is the strong launch performance at the 477 unit Lentor Central Residences, which was launched just 1 month ago. We saw 93% sales take-up rate during launch weekend. In total, there are already 6 launches that happens in the Lentor New Township. And to share, out of the 6 launches, right, 93.84% of total Lentor launches is already sold. So estimated sold units till date is 2,772 units out of 2,954. So estimated unsold is approximately around 200 over units only. Based on the top bids of $920 per square foot, the average selling price for new project at Lentor Garden could be projected at about $2,150 per square foot.